Hi, Crypto Dej. I'm in the same position as you. I've hit the retire on goals, but I should rotate from MicroStrategy to Tesla, but I'm worried about all my eggs in one basket. My plan is to listen to James and buy the dip, i.e. NVIDIA, and try to buy Sol and Sol strategies, etc. But my locations, I think it's allocations, makes it impossible to do so. But if you can, go for it. So this all ties into this key element of this. So I watch all the best capital allocators in the world, all the smartest people in the world. I study them. I learn from what makes them successful and what doesn't. And people like Stanley Druckenmiller is one of my top 3 heroes. This is just so important. And a big part of how I operate is based on this as well. And that is he advocates high conviction investing. So I do a massive amount of upfront work to find the winning assets with the best risk reward. Concentrated bets, high conviction bets, whatever you want to call it, when the odds are heavily in your favor. And he calls this going for the jugular. I know it's a bit of a scary thing to say, especially on this Happy Easter Day. Happy Easter, everybody. But it's his quoted line is, the way to build superior long-term returns is through preservation of capital and home runs. Preservation of capital. You invest in things that might appear risky, but they're not going to blow up and go to zero, although that is always possible. But you're also in home run assets. And when you have tremendous conviction on a trade, you have to go for the jugular. And it's not about diversification for its own sake. It's about waiting patiently for these asymmetric opportunities and then sizing, going in, deploying when the time is right. If you learn nothing else in investing, learn this. There's a couple of critical things to talk about in today's video. DBF, thank you for coming. But that is just so important. And that's how I roll. Anybody that's followed me on Patreon, everything I do, very small allocations to very risky assets, very high conviction in very few assets. 95% of my portfolio is in 4 things. That's it. And they are all crypto and AI. That's, again, high conviction, but also deploying at the right time. And we're going to talk about that now as well. When to deploy. And I'm taking time on this because it's such an important topic. So bear with me as we go through and we get to some charts in a second. But again, you are doing the right thing, Crypto Dej, building high quantity, in high quality, high conviction assets, correct. But remember allocations. Don't ever be 75% in one thing. I'm very overweight in one asset, but that's because my options trades just exploded, but I'm trying to rebalance and balance my risk reward. But having a prioritized discipline for entry points is so important. That's why we built all the models we built to look at things like mean reversion and DCAS, dollar cost averaging on steroids, which you should be using too. And you did a little mistake as well. I always say maintain a minimum cash reserve of at least 5%. My cash is kind of heavy right now because I'm very concerned about the market, as many others are, but I still am tiptoeing into the market at great deals. Low 220s for Tesla, NVIDIA in the double digits, that type of stuff. Solana, the low 100s, they are all very attractive to me. Okay, but make sure you have a cash reserve. Never, ever go all in on the market unless it's really like November 2022, and then you throw the kitchen sink at the market. But let's look at a couple of quick charts right now. I'm going to tell you basically, not using DCS, but just showing you how I roll. So this is Bitcoin right now, and the red shadow on the ATR model is the bear market. Very important. Bear is when you stack. Billions are made in the bear or the early bull. That's fine too. But right now, Bitcoin on level 5 on the ATR, I do not touch it. I haven't bought Bitcoin in ages. And that's what I do. I get really greedy, go into the Bitcoin miners and MicroStrategy and all the other Bitcoin proxies in the bear, and I stack like a madman. And then as the bull market continues, I start getting more conservative, start stacking cash, and I do not DCA or buy these things at these levels. Okay. I would buy right now if I saw a Bitcoin around 60K. I'd buy it, but I don't think we'll go that low. We may never fall below 70K again, but we'll see. And MicroStrategy, it's level 4 in the ATR. Again, I do not touch. I do not touch because I like to buy these things and they're cheap. Like when you're buying it at $16 or $19, it's hard to buy it at 319. So that's just me. I like things cheap when there's a high probability of a very good return. So crypto dash for these two, I personally don't touch, not financial advice. However, Solana is in the kill zone at level 2 in the ATR and between level 2 and level 3 of the ATR. This is compelling because when Solana is $108 or sorry, I got to refresh my mind on the price. Whatever it fell to. Anyway, low digits. Let me pull up my chart to see if anything's happening in the market right now too. I didn't have my trading view open. And just want to make sure I get this right. Yeah, Solana fell down as low as, double digits for a very short while, and people were very nervous. But it's probably going back to all-time high, which is a 3x from here, 300. That is compelling. Again, we're not in a bear market yet. I do believe the crypto bull market still has some legs. So this would be something I'd still DCA into, and I still do. The other one, too, is Tesla, level 3 on the ATR, absolute kill zone. I am buying this like crazy, and I'm rotating into this like crazy as well, as you've all seen over the past few months. And that's my plan, is to get a certain allocation. You all know my target for this puppy. And we'll talk a bit later as to why this one is so important. Again, love it or hate it, you have to have it. So put your biases aside and get some of this thing, because it is, in 35 years of analyzing stocks and stuff like that, I've never seen a company like this, okay? And I'm not a delusional Tesla fanboy, but I am absolutely data driven, and it's bonkers what this company could do. So this is one that I kill. And again, very important, allocate at right times. Watch the mean reversion, watch the layers, watch the seasonality of these different assets. So remember, Bitcoin seasonality, crypto seasonality, and stock seasonality and AI seasonality are all completely different. They do not follow the same patterns, okay? And there's also some assets that are recession-proof, others that are not. There are some assets that are very liquidity sensitive, like Bitcoin. Others are not. So just to bear that all in mind. So I hope that helps.